Hey everyone, and welcome back. We're diving deep into the market today. Just a quick heads up for, anyone who wants to stay updated.
Absolutely.
We've been looking at a bunch of sources, CNBC, Investopedia, Yahoo Finance, all that good stuff.
Right, right.
And it seems like things are getting pretty interesting, especially with the Federal Reserve. They've got that interest rate decision coming up December 17th and 18th.
Yeah, that's right. And you know what's really catching my eye? It's the market's performance. I mean, both the S&P 500 and the Nasdaq are at all-time highs.
Really?
Yeah, 6,047.15 for the S&P and 19,403.95 for the Nasdaq. It's pretty remarkable.
Wow, that's pretty amazing. So even with, all the economic question marks out there, investors are still feeling pretty bullish.
It seems that way. Yeah, investor confidence is definitely strong. And, the S&P 500 is actually on track for one of its best years since 2000.
Wow, since 2000.
Yeah, we've seen 54 new all-time highs just this year.
That's incredible. And even the Dow Jones, even though it dipped a little, it's still holding strong at 44,782.
That's right.
So yeah, I think it's safe to say we're in a bull market.
Definitely.
Yeah.
And a lot of that upward movement is coming from the technology and consumer discretionary sectors.
Interesting.
Yeah, you can actually see it if you look at ETFs like XLK that tracks tech stocks and XLY for consumer goods. But I've seen some pretty significant jumps.
So basically what you're saying is people are expecting tech to keep innovating and consumers to keep spending.
Exactly. They're betting on continued growth in those areas.
Makes sense. But here's where things get even more interesting. It's not just the big names that are doing well.
Right.
The Russell 2000, which tracks smaller companies, it actually just went past its 2021 peak.
That's a really important point because it means the rally is broadening. We're seeing more companies participating in the gains.
So if you've been thinking about getting into those smaller companies, now might be a good time to take a closer look.
I'd say so.
All right, so the stock market's looking pretty good. But
Yeah.
let's shift gears for a second and talk about the economic data because we're seeing kind of a mixed bag. On one hand, manufacturing activity is up, which is a positive sign.
Right.
But the ISM manufacturing PMI, it's still under 50, which usually means things are contracting. And then there's construction spending, it's up too. But who knows if that can really last?
Yeah, you've hit on a key point there. This economic uncertainty is why everyone's going to be glued to the November jobs report.
Oh, for sure.
It could really sway the Fed's decision on interest rates.
Yeah, no kidding. That Fed meeting on December 17th and 18th, that's the big one everyone's waiting for.
Absolutely.
And the CME FedWatch tool, the one that analyzes market predictions, it's saying there's a 75% chance of a rate cut. That's a pretty strong indicator, don't you think?
It is significant, and it's important to think about what a rate cut would actually mean for everyday people and businesses.
Right.
Lower borrowing costs could really give the economy a boost. But the question is, how will the market interpret it? Will they see it as a good sign, or will they worry about underlying weaknesses?
That's the million-dollar question, isn't it?
It is.
But while we wait for the Fed to make up their minds, there have been some other interesting developments. BlackRock just bought HPS Investment Partners for a cool $12 billion.
Wow.
Seems like they're really trying to expand their reach.
Definitely a bold move.
Then we've got the U.S. Steel situation, completely different story. Their shares dropped 7% after President Trump said he's still against the Nippon Steel acquisition. Really makes you think about how much politics can affect the market.
It's a great example of how political factors can create volatility and uncertainty. Investors always need to be aware of that.
For sure. All right, so we've got a soaring U.S. market, mixed economic signals, a big Fed decision coming up, and even some political drama mixed in. What's next?
Well, the key is to remember that all these things are connected. What happens in one area can have ripple effects across the entire financial landscape.
Right, like a chain reaction.
Exactly. And those ripples can definitely reach your portfolio. So understanding the bigger picture is absolutely crucial.
Couldn't agree more. So let's talk about what's happening globally. The U.S. dollar is getting stronger after President Trump's warning to those BRICS nations, and the euro is weakening with all the political turmoil in France.
Yeah, these global events really show how interconnected everything is. A strong dollar can impact American companies doing business overseas, and instability in Europe can make investors all over the world nervous.
It really highlights how closely tied together the global economy is, doesn't it?
It does. One event can trigger a chain reaction across continents. It's like a financial butterfly effect.
I like that, a financial butterfly effect.
And speaking of chain reactions, it looks like Asian markets are following Wall Street's lead. Sydney shares are up, and futures for Tokyo and Shanghai are looking optimistic.
So it's all connected.
It seems that way. Positive sentiment in one region can often influence others, creating a sort of domino effect.
Interesting. So while we're keeping an eye on all that global stuff, we've also got a couple of Fed officials giving speeches today. Adrian Ogler and Chicago Fed President Austin Goolsbee.
Oh.
Their comments could give us some hints about what the Fed's thinking on interest rates, especially with that December meeting coming up.
Absolutely. Sometimes it feels like you have to read between the lines with these speeches, but those subtle hints can be really valuable. They can give you clues about the future direction of monetary policy.
It's like we're financial detectives trying to solve the mystery of what the Fed will do next.
Exactly. Every piece of information, even the small stuff, can help you understand where the market's heading. And speaking of information, don't forget, we have some big earnings reports coming out after the market closes today.
Oh, yeah.
Yeah, Salesforce and Okta are both releasing their reports.
Interesting.
It could have a big impact, especially for anyone interested in the tech sector.
Right. Those tech giants can really set the tone for the whole industry. What they do often affects other tech companies.
Exactly. So as we wrap up this part of our deep dive, I'm curious, what are your main takeaways so far? What's standing out to you?
You know what really strikes me is how resilient the U.S. market is. I mean, with all the uncertainty, economic data, political stuff, global events, the S&P 500 and the Nasdaq are still breaking records.
Yeah.
It really shows you the power of investor confidence and innovation, especially in tech and consumer sectors. What about you? What are your thoughts?
I completely agree.
Mm.
And it just goes to show how important it is to stay informed and be adaptable. You have to be able to analyze the information, assess the risks, and adjust your strategies accordingly, especially in a market as dynamic as this one.
Well said. And you know what? It's important to have a little fun along the way too, right? Following the market is a bit like riding a roller coaster.
I could see that.
There are thrills, chills, and sometimes you just gotta close your eyes and hold on tight.
That's a great analogy. But even with all the chaos, there's a fascinating logic at play. It's about understanding what drives those ups and downs, the interconnectedness of global events, and even the human emotions that shape market behavior.
That's a really good point. And remember, this is just a snapshot of where the market is right now. Things can change really quickly.
That's true.
So stay tuned, because there's always more to uncover in the world of finance.
Always.
It really highlights how closely intertwined the global economy is, doesn't it? One event can trigger a chain reaction across continents. It's like a financial butterfly effect. And speaking of chain reactions, it looks like Asian markets are taking cues from Wall Street's performance, with Sydney shares on the rise and optimistic futures for Tokyo and Shanghai.
That's a great observation. There's definitely a sense of interconnectedness between global markets. Positive sentiment in one region can often influence others, creating a sort of domino effect.
So while we're keeping an eye on these global developments, it's also worth noting that we have a couple of Fed officials giving speeches today. Adrian Ogler and Chicago Fed President Austin Goolsbee.
Oh, right.
Their comments could provide some valuable insights into the Fed's current thinking on interest rates, especially leading up to that crucial December meeting.
Absolutely. Paying close attention to these speeches can sometimes feel like reading between the lines, but it's often these subtle hints that can offer clues about the future direction of monetary policy.
It's like we're playing financial detective, piecing together the clues to solve the mystery of what the Fed will do next.
Exactly. Every piece of information, even seemingly insignificant details, can contribute to a more complete understanding of the market's direction. And speaking of information, don't forget that we have some key earnings reports coming out after the market closes today.
Oh, yeah.
Salesforce and Okta are both releasing their reports, which could be quite impactful, especially for those of you interested in the tech sector.
That's right. Those tech giants can really set the tone for the whole sector. Their performance often has a ripple effect on other tech companies, so it'll be interesting to see how they fared this quarter.
Indeed. So as we wrap up this part of our deep dive, I'm curious, what are your main takeaways from all this information so far? What stands out to you the most?
For me, it's the incredible resilience of the U.S. market. Despite all the uncertainties, the economic data, political factors, global events, the S&P 500 and Nasdaq are still breaking records. It really speaks to investor confidence and the power of innovation, particularly in the tech and consumer sectors. What about you? What are your thoughts?
I completely agree. And it reinforces the importance of staying informed and being adaptable. We need to be able to analyze the information, assess the risks, and adjust our strategies accordingly, especially in a market as dynamic as this one.
You've got that right. And I think it's important to try and have a little fun along the way too, right? Because following the market is a bit like riding a roller coaster. There are thrills, there are chills, and sometimes you just want to close your eyes and hold on tight.
I can't argue with that. But even amidst the chaos, there's a fascinating logic at play. It's about understanding the forces driving those ups and downs, the interconnectedness of global events, and even the human emotions that ultimately shape the market's behavior.
Well said. And remember, this is just a snapshot of the market right now. Things can change in the blink of an eye. So stay tuned, because there's always more to uncover in the world of finance. So we covered a lot today, huh?
We did?
Record highs in the market, those mixed economic signals,
Right.
the Fed's big decision coming up, even some international stuff. It really shows how much is happening right now.
Yeah, it does. It highlights something really important.
What's that?
It's not just about understanding where the market is right now. It's about being prepared for what might happen next.
That's true.
We've only scratched the surface today.
Yeah.
There's always more to learn, more to dig into.
Yeah, I guess that's part of what makes it so interesting, though, right?
Absolutely.
It's like a puzzle that keeps changing.
It is.
Always something new to figure out.
Exactly. And, as we wrap up this deep dive, I want to leave you with something to think about.
Okay.
We talked a lot about that jobs report and how it could really impact what the Fed does. So for someone like you, who's clearly paying attention to the market, what are the key things in that report that we should be watching? What will really tell us what the Fed's going to do and how the market might react?
That's a great question to think about. It's like a little homework assignment for our listeners. Go out there and do your research, everyone. The more you know, the better you'll be able to navigate the market and make smart decisions.
I couldn't agree more. Stay curious, stay informed, and stay engaged. The market's always changing, and that's what makes it so exciting and rewarding to follow.
Well said. And on that note, we'll wrap up this deep dive. Until next time, everyone, happy investing.